you will learn about all the secrets of time and price. This video will indirectly be responsible for you increasing your win rate and return, aka you making more money, because that's what we're here for. We're here to make money. I think we can all agree that a lot of topics in the trading industry are very vague, including the time topic. What does it mean, the time and price? Again, that is why I'm here to help you to cut straight through the bullshit and get straight to the point and teach you everything that you need to know in a step-by-step manner. The first thing that I want you to understand, I need you to look at time as volatility. Volatility meaning that there is movement in price. So with volatility in the market, and if we are, for example, saying price is very volatile, then price is moving a lot. If price is not very volatile, then price is, of course, not moving a lot. It's then referred to as consolidating. When price does have the volatility, then it's usually a trending market, as in we have a clear trend in the market, either up or down, very clear. So the first step is understanding that time equals volatility. Time is not some magic number where something magical happens and all of a sudden we can send out some fancy messages with eyes and it's all in the time. No, time is simply volatility. Time equals volatility. It's not a magic number. That's what I need you to understand first. And the second thing I need you to understand is that volatility equals energy. Time equals volatility, and volatility equals energy. I want you to look at time as the energy in the market. Because for price to move somewhere, time needs to be in agreement with price. When is price in agreement? When we are coming into a PD array, we are looking for our entry pattern, then we have price in agreement. But what we're going to go over is when we also have time in agreement. Because we can have price in agreement, but without time, price will not actually move higher or lower. Price will not move anywhere because it does not have the volatility, it does not have the energy to move somewhere. The same as if we want to work out, then we need some energy. So we first consume energy, there's energy in, and then there's energy out. So the in is us eating, sleeping, we get energy in. That if we want to push ourselves forward, if we want to do something, then we are letting the energy out. So we need energy in the first place as human beings. The same as price, and the market needs energy to move, to push itself. That energy is time. And that time is exactly what I will be going over. But that is a mindset shift that you need to have. You need to understand that first. So again, time equals volatility. Volatility equals energy. Price needs energy in order to push itself either higher or lower. The same as we need energy in order to push ourselves towards whatever you want to do. So if we want to have time and price in agreement, or price and time in agreement, then let's go over NASDAQ right here and let's see if we can look at price and get an indication of what price wants to do first. Let's actually zoom out to the weekly time frame first. Because on the weekly time frame, and this was actually mentioned in the previous video as well, where we talked about fair value gaps, then we had this weekly fair value gap that price might want to trade into right there. Now, how can we know that price does want to trade into that? It's by looking at the time frames below that weekly time frame to see how the fair value gaps are acting on the time frames below the weekly time frame. So what I mean by that, if we go back into the 4 hour, then right here we can see on the 4 hour we had this fair value gap lower right there. That fair value gap lower, that should have been the fair value gap that would have been responsible for taking out this low right there. We were already that close towards that low. This fair value gap should have been the one that pushed price lower. That fair value gap did not push price lower. If, again, we look at the previous video, that fair value gap is not following through. That fair value gap is getting disrespected by a new fair value gap, which is this 4 hour bullish fair value gap right there. So let's keep that 4 hour bullish fair value gap on our chart. Let's delete the bearish fair value gap. Then what we can see is that on this Thursday right there, we are coming into that 4 hour fair value gap. And price right there is coming into it, but it's not pushing higher immediately. it came into it a second time right there. It swept that low, this low right here, and then eventually it continued higher. So if we look at the price, then we can say, all right, this 4-hour fair value gap on that low right there, that Thursday, the price right there is in agreement to continue higher. Is time in agreement? No. And let me tell you why. First, we need to understand what I mean with time. The main thing I mean with time is news, the economic calendar. I use forexfactory.com for my economic calendar. And when I look at forexfactory.com for my economic calendar, the thing I want to see is that I want to have an orange or a red news event for the US dollar right here, because I'm trading NASDAQ. NASDAQ is, of course, correlated with the US dollar. So I want to have US dollar news, either orange folder news or red folder news, supporting the ID on that particular day that I want to trade. So on that Thursday, when we had a sting into that fair value gap right there, we also had unemployment claims, US dollar unemployment claims, red folder US dollar news. So why did it not expand higher? Because price is waiting for a bigger shark. We had one of the big three during this exact week. Because on Friday, we had NFP. That is one of the big three. The other two are CPI and FOMC. Those are the big three. This big three has a lot of volatility. Any of those news events right there brings a lot of volatility into the market, more than usual, more than your usual unemployment claims, etc. So what you'll see is the day ahead of those news events, price is held into a consolidation. Price is not that volatile. So to repeat that, because it's a mechanical rule, the day ahead of one of the big three news events is not where you want to be trading. And as well, of course, on the day itself, ahead of one of the big three news events, that is also where you don't want to take a trade. Only after. Because what did we talk about? We talked about time being volatility, volatility being energy. Time in that sentence is news. So at 8:30, when NFP drops right there, that is where what comes in? The energy in the market. So that is when you can look to trade, because that is where the volatility comes into the market. Again, time is not only news, it is also looking at our kill zones, but that is something we will go over later on in this video. So price came into that 4-hour value gap right there on Thursday. Price is in agreement, but time is not in agreement. So when price is in agreement, price still has the same intention. It wants to continue higher. Believe me, the intention is there. It just doesn't have the energy to do it. It's the same when we want to work out. We want to work out as best as we can, but sometimes we just don't have the energy to do it. And then when we come back at a later point, when we do have energy, then we see the results. It's the same exact thing right here. Price has the intention that Thursday to continue higher. It just doesn't have the energy to do it. Time is just not supporting the ID. So time and price are not in agreement right there. So when is price and time in agreement right there? Well, what did we see? We came back into that fair value gap right there again, a second time. And we also swept a low right there. A 4-hour swing low, which is just the discount array sitting right there. So if you add this onto the ID of the previous video, and can you now see when we come into a fair value gap a second time, or when we are not expanding the first time, if you combine that with time, then you now exactly know which fair value gaps price is willing to trade higher off of, or order blocks, breaker blocks, mitigation blocks, swing lows, swing highs, whatever you want to use. I can hear you think, Arjo, this is all fun and games, but again, this is hindsight. Show something in backtesting. Show that it works. Let me show you something better. Because I don't backtest. I like to do things live. I'm not a backtesting warrior. I'm a live trader. Here we are on a live environment. And what you can see right here is that I'm placing the trade live right there. And I'm aiming for my 1 to 2 RR. Eventually right there, get filled in, experience some drawdown as well. And the thing that I'm doing right here is I'm using that 4-hour swing low as my PD array. That is my discount array where I want to potentially see higher prices off of. Then after that, what I want to be looking at is a 5-minute entry pattern. That 5-minute entry pattern will give me the confidence that that 4-hour discount rate might hold, or might at least give a rejection higher. Then what gives me the last boost of confidence is time, because there's volatility in the market, there's energy in the market, there's nothing holding price back anymore. There's price in agreement, there's time in agreement. Price is ready to move higher right now, because before that it held it in a consolidation. After NFP, boom, there's your energy. Now price is allowed to move. So then your PD array, your entry pattern on the lower time frame, and you have time in agreement. Perfect. Take the trade. Then I wrote down, now we wait. And the thing I'm waiting for is, of course, my stop loss could be hit for sure. I'm looking at my risk management potentially, but in this case, I didn't even need to, because it hit my take profit already very, very quick. I mentioned it to you a lot of times in the previous video in the weekly forecast that I want to see NASDAQ targeting that weekly fair value gap. The only thing that was holding NASDAQ back from targeting that weekly fair value gap was time. This whole week, you can see that NASDAQ right there was constantly trying to trade into the weekly fair value gap, but it was failing. It was not following through. Why is that? Because it was waiting for NFP. That's how you can read the time and price. Price is not following through to the weekly fair value gap, because otherwise it would have already done it in the beginning of the week. And if it did that, it would have been a whole different story. Because right there, price was waiting for NFP to trade into the weekly fair value gap. It needed energy. And you could tell that by price not coming into the weekly fair value gap earlier in the week. My simple take profit is the 1 to 2 RR. Then my eventual target is the weekly fair value gap, which we ended the week right there. So right here, again, to go over it, I used this discount array right there on the 4-hour. I waited for time. Time was, in this case, NFP at 8:30. At 8:30, if we look at the 5-minute, we had a huge move down. Now right there, I didn't get scared because I knew, all right, that's volatility. I wasn't even at the chart at the time, to be honest. I was just waiting for it to potentially set something up. Then time right there also validated the PD array. So the next thing that we will talk about is time can also validate your PD arrays. Because when we look at time right here, NFP had a sting into that 4-hour discount rate, and then it showed my entry pattern. When it does that, time is just validating my PD rate, my 4-hour PD rate that I have right there. Because before that, it didn't even show an entry pattern. That's the thing. When I tell you, time right there will tell you into which PD rate it wants to sting into. This is exactly what I mean. Because before that, it didn't even show my entry pattern. Only once time was there, 8:30, sting into the 4-hour PD rate, 5-minute entry pattern, that's it. It's extremely mechanical. And again, you want to wait for the news release first. You want to wait after the news release, you want to get involved, not before the news release. You are not looking to short right there. We are not gamblers. We are professional traders. We wait first for the news release, and afterwards we can get involved once we have price in agreement as well. So that right there, that fair value gap on that 5-minute fair value gap, that was my entry. Now, this is again how we can use the economic calendar to know when price will likely move higher, when it will likely move lower, on which particular day it wants to move higher or lower. If you are in my free Telegram, you would know the reason why I wanted to upload this video on a Saturday, because I mentioned in my Telegram beforehand, before the NFP release, that I need Friday's price action to show you what I mean. Just looking at the economic calendar, I already knew what was likely going to happen. Again, is that me bragging, saying that I have the magic enigma? No, I don't. I'm just using the logical steps, the systems that I have set out for myself, that you can also use and that I'm trying to teach you here. That's it. I'm showing you exactly how it works. But now there's another thing. You have time as in news, and you have time as in kill zones. The way you can see kill zones is the exact same thing as you can see news. Kill zones equals, again, just the time factor, and the time is the volatility, and the volatility equals that energy. It brings energy, it brings life into the market. But if you want to know which day is likely going to expand, then your kill zone is not that relevant. If you want to know which day is likely heading higher, heading lower, which is the most volatile day of the week, where will the moves happen, then you look at the economic calendar. If you want to go into the lower time frame to get a better idea, all right, are we ready to expand higher right now? Then you look at the kill zones. You want to know if a day is going to actually move higher or lower and not stay in rangy conditions. Economic calendar. That is very important to understand. That is why I like to always say, if you are in the money making team and you follow the guidelines that are in the money making team mentorship, then you know exactly why I preach. News is more important than a kill zone. Way more important. But if we do look at the kill zone right here, for the exact kill zones, I'm not going to discuss them right here. They are in the A to Z guide. Go watch the A to Z guide. Search for kill zones. You will find them for both Forex and for indices. Then right there at 9:30, we have equities open, which is the start of the kill zone. We already have a fair value gap higher. Again, when we already have a fair value gap higher, then that fair value gap will likely get respected. So that low that is sitting right there, there's a high probability that that right there will get respected. Then once we create a second fair value gap that is sitting right there, that is my entry. That right there is my entry. In a kill zone, in a day where the economic calendar is supporting the ID, that is extremely high probability. The highest probability trades happen on where we have news supporting the ID. Then even higher probability is when we have kill zones supporting the ID. So we have time, PD array, entry pattern. That's all it is. Time right there is not a magical number. Just like with the PD arrays, don't get too crazy with it. Kill zones and news is all you need. Don't get too crazy with it. If you need a magical number, if you need a magical time where only during that time your trade works out, then most likely your strategy just sucks. Unless, and I will eat my words, if it is backed by data. If you have the data to support trading only during a very specific time, go ahead, be my guest, then I will eat my words. But the thing I'm seeing a lot of the times is that people try to trade a magical time that they pulled out of their ass without any data supporting the ID. Then if you're looking for that magical time, you're likely just in a shiny object syndrome and your strategy just sucks. Very important to understand. So I want to share with you two more examples, two more insights that are extremely crucial. This is again the trade example that we also took live in the money making team. And here we have that fair value gap to target right there. So if you go into the 1 hour, then on the 1 hour, what we saw is that fair value gap that is sitting right there, that premium array. That is the premium array that can push price lower. On that Wednesday, do we have news supporting the ID? Yes, perfect. So we have time. Perfect. So we have time agreeing. And then if we go into the 1 minute time frame right there, then what we can see is once 9:30 opens right there, 9:30 is responsible for, again, stinging into that premium array, having an ST, having the next fair value gap lower right there, and that is the trade we took. Because what did price do right here? Price was in agreement. Was time in agreement? Yes. What did time do? Time validated that 1 hour premium array. Why? Because when price, equities open right there, had a sting into that premium array, then showed our entry pattern right there, then that automatically means that time validated that PD array, so it is ready to go lower. Why does that mean that? Because beforehand, it didn't even come into a premium array, into a valid 1 hour premium array. And beforehand, it didn't even show an entry pattern. So all we did right there is time, PD array, entry pattern. Time in agreement because we have news and a kill zone. Price in agreement because it's coming into the premium array and it's showing our entry pattern. Time and price, shaking the hand, perfect. We can make some money. Then on EU right here, because of course, Forex works the exact same. Every market right here works the exact same. The only thing that changes is, again, the kill zones might change a little bit because the indices are very reliant on equities open, whereas EU has two main kill zones that you want to be trading, which is London kill zone and New York kill zone. But for Forex, it is even more so that kill zones are more so irrelevant. The most relevant thing on Forex is that we have news supporting the ID on that particular day to go higher or go lower, to actually have a move. When you have news on a particular day, the kill zone is less relevant. The reason for that is because the whole day is already more volatile. This right here is what we mentioned on the weekly forecast, because we had this daily fair value gap that is sitting right there. Then if we go into the 4 hour, on the 4 hour right here, we had this ST, that fair value gap that is sitting right there on the 4 hour. During the free weekly forecast here on YouTube, we mentioned that if we want to continue lower, we can continue lower from that fair value gap right there already. Why did I say that? Because usually people advise you to not trade on Mondays. Why is that? Because usually Mondays don't have news events, aka they don't have time, aka they don't have volatility, aka they don't have energy. Mondays usually don't have energy supporting the ID. But when they do, and especially in a week like this, where we have NFP at the end of the week, and we have Monday with a USD news event, for, of course, EU, Euro, US dollar, it's already in the name, then that right there is interesting to potentially get involved at the beginning of the week, and then later on in the week, we want to slow down again. We want to push the brakes. Why? Because then we are approaching NFP, and then after NFP, we want to potentially get involved again. So on that Monday, we already know, looking at the economic calendar, that Monday will likely be more volatile. That whole day will likely be more volatile than usual. So in here, we had price coming into that daily fair value gap, showing a 4 hour ST. So right there, PD array wise, price is already in agreement. With time, the only thing we need right there is for us to sting into that 4 hour PD array and then show a 5-minute entry pattern. So if we go into the 5 minute right there, then once we are here on the 5-minute time frame, we have this 4 hour fair value gap that is sitting right there, which we can expect lower prices from. We have time supporting the ID. Time in this case indicating that we have news supporting the ID. The second thing of time is that we have kill zone supporting the ID. So right there at 2 a.m. New York local time, we have London kill zone, London open right there, which just brings volatility into the market, just energy into the market. That's all it is. That's the magic. So all you're waiting then is you have your PD array, entry pattern, you have time in agreement, perfect. So all we need to do here is we wait for our entry pattern. That's it. So right there, time again validates the PD array. Why is that? Because it stings into that during the kill zone, during that news day. Does it matter if London or New York stings into the 4 hour fair value gap? No. If one of them does it and one of them shows the entry pattern, then that's it. Does it matter that we have all this liquidity right there, that we have this Asia range right there? No, it's completely irrelevant. Why is that? Because we just have this 4 hour fair value gap that we're expecting lower prices from. All we need to do is look to the right here, and look for our 5-minute entry pattern of that 4 hour fair value gap. And with irrelevant, someone mentioned this in my mentorship and said it absolutely perfectly. We're incorporating every single concept here, but we don't have the need to reference it. That is the beauty of it. So if we look at the right here, we have time in agreement already. We potentially have price in agreement. The only thing we need right now is we need that entry pattern. We have time, PD array, now the entry pattern. Right there, fair value gap. All right, perfect. Then eventually we are respecting premium arrays. Then right there, that right there is a valid entry. Now, again, this is one I did not take live. The only thing I did not take live right there is my entry pattern. But the entry pattern there is the easiest thing. The hard work is done on the higher time frame. The entry pattern is very simple. All I need to do right there, which I also did on the live trading video on NASDAQ. So if you're wondering why I zoomed out to the 15-minute and the 1 hour, because I need to know where to place my stop loss. Because if you remember the videos on the fair value gaps, the previous video, and the order block, the video before that, the 5-minute right here needs to be in context of the 15-minute. Because on the 4 hour, there's no reason to return above that 4 hour fair value gap right there. The same for the daily. The daily, there was no reason to return above that daily fair value gap. So no reason to return above the 4 hour. Is there a reason to return to the 1 hour somewhere there? No, because right there at that entry level, there's no fair value gap just yet. So we can zoom in to the 15-minute time frame and see where we need to place our stop loss. On the 15-minute, we can see that we have that fair value gap right there. But this fair value gap that is sitting right there has already been traded into right there, which created that new swing high that is sitting right there. So that swing high that is sitting right there is the same exact thing as we just saw on the 5-minute, which was just that high right there, the most recent swing high. So that is my stop loss, targeting a simple 1 to 2 right there. And then eventually, of course, we also have a logical target, which was the daily context low. Because if we zoom out to the daily, then this low right there is our target, because premium rate to discount rate, which on the 5-minute, the 1 to 2 is a very easy target right there in between that context low. You don't need all this RR. A 1 to 2 will make you a millionaire. This is when time and price is in agreement. You have time, which is your news and kill zones. Then, like I mentioned, for your Forex, news is more important. For indices, I also want the equities open. Again, don't get too carried away with it right here. Even if Asia already had a sting into that 4-hour fair value gap right there, then what would London likely do? London, if Asia already had fair value gaps lower, London would have just been a retracement of whatever Asia created right there. So this right there, the times here can switch around. The thing you need to understand for Forex especially is news. And for the indices as well, news. But for indices, for even higher probability, avoid London at all costs and only trade equities open or the PM session. And then price. What is price? Price is just your PD array and your entry pattern. So you have your draw liquidity. Then if we are going lower, where are we likely going lower from? Or if we are going higher, where are we likely going higher from? There's your PD array. Then you have your entry pattern inside that PD array. Then once you have price right there and you have time, and they are both right there on the chart right there, they are happening at the same moment, boom, that is when you execute. That is when you have extremely high probability trades. If one of them is not there, so time is not there, but price is there, that automatically means that that is low probability, lower probability. Again, you need to understand the definition of probability. You might still catch a winner, but if you catch a winner in low probability conditions, that your win rate is only 20%, you were just very lucky. And 8 out of 10 times you will lose. That is important to understand about probabilities. Those are all the secrets that you need to know about time and price. If you like this, you will absolutely love the money making team, where, of course, our main focus is on making money, which the money making team, and all credit to them, is doing extremely well. So for sure, check that out, link in the description, or scan the QR code that is on your screen right now. Then I will see you at the free weekly forecast on Sunday, 8:30 a.m. New York local time. Perfect. Thank you.